This is Jay Martin.
All right, what's up, guys? Here we are. I'm sitting down with Cliff Hale-Sanders, the CEO of Voyager Metals. Cliff, thank you for making the time, and I'm excited to get this story in front of my audience.
Well, Jay, thanks for having me on. I'm happy to speak to the audience. Hopefully, they'll find it interesting.
Yeah, well, I know they will. So, the reason you and I are speaking is because I had one of your colleagues on last week, Mark Brennan at Cerrado Gold. Exciting story, arguably in the running to become the world's lowest cost gold producer. So even if I put my skeptic hat on there, if you land anywhere in the top 10, you're turning heads, and they got a lot of work to do before they get there. But that's a really smart place to be looking to deploy cash right now. That's how we ended up in contact, because you're in the same camp, right? You guys work together, pool resources between Cerrado and Voyager and a third company. I always gravitate towards groups like that because you can pool resources, expertise, and the team has put a few mines into production, so you're in good company. For anybody who's not familiar, can you just start with the super high level elevator pitch? What are you up to at Voyager Metals, Cliff?
Well, Voyager Metals is looking to develop and bring forward the Mont Sorcier iron and vanadium project located just outside of Chibougamau, Quebec. It's in a well-established mining district, a lot of historical mines there. We're currently just released an updated resource, so we have about 680 million tons in the indicated category, which we will be using to backstop a feasibility study that is targeted for completion at the end of Q1 23, give or take. And we think that will daylight a very robust, very straightforward, and very simple iron ore project. Iron ore is all about scale and size and logistics, and one of the key benefits we have is all our logistics are in place. The railway's there from Chibougamau to the port of Saguenay. It's 300 kilometers. The port is there, ready for our ships, underutilized, more than enough capacity. And relative to other iron ore stories, that's probably going to save us $1 billion in upfront capital relative to other projects. So we think the numbers are going to be extremely robust. We did do a PEA back in 2020, which is available on CDAR, that identified a project on a smaller subset of our resource that had an NPV of 1.7 billion. So we have pretty high expectations for this feasibility study.
That was an epic elevator pitch, Cliff. I got to tell you, very concise and detailed. All right, so let's start with iron ore, because as we were chatting before I hit record, the majority of commentary and media that comes out towards people like me, right, resource investors, is focused on gold, silver, copper, uranium. There's not a lot of coverage when it comes to the supply and demand economics of the iron ore sector. And so I'd love you to give us your perspective on that. What are the key things we should be paying attention to, and what drives supply and demand?
Yeah, I think the way I like to look at it, and the way we like to look at it as a group, is which commodities actually make the most money. And that's going to be the bulk commodities, be it iron ore, coal, coking coal, mineral sands. The biggest companies of the world, Rio Tinto, Vale, BHP, FMG, they're all iron ore stories, really. That's what drives their income and what drives their sustainable long-term, 40 plus year sort of dividend streams. And that's kind of the project we think the Mont Sorcier has. It's got a mine life of 40 years. But when you look at pure supply and demand fundamentals, 50% of the world's iron ore is consumed in China. That's not expected to slow down anytime soon. It's primarily used in everything we do every day, whether it's your car, your building, your bridge, your infrastructure. So as we go through the next infrastructure cycle, not only in China, the US and Europe, I think demand for iron ore and thus steel is going to continue to remain robust. And then what makes Mont Sorcier a little bit different is we're probably also going to have a vanadium byproduct, which will add an extra layer of revenue to the story. Vanadium is primarily used as an alloying agent within the steel to make strengthen the steel from a weight to strength ratio. But it's also a potential source of new battery technology for vanadium redox batteries. Don't know if that's going to be as big as what people think, but that could be a new source of growing demand. So I think the outlook for both of our core commodities over the long term is extremely robust. Obviously, short-term swings and roundabouts, but I think if you look at the sustainability of these bulk commodities, it's what makes the money in the resource space.
Yeah, and you're right. Time horizon matters, right? And we're looking at some near-term volatility. Thing I like about commodities like copper, like iron ore, is that maybe there's going to be slowdowns in certain economies, but unless there's a unified global agreement to shut down growth today, we're all good right here, right? There's always growth occurring. And the healthiest balance sheets in the world right now are coming out of the emerging economies. And the majority of guests that I have on this show, that's where they're allocating capital right now, is towards those emerging countries. So anyways, let's get into the project. I love the jurisdiction. You're in Quebec, Canada, one of the most tried and tested mining jurisdictions in the world. You mentioned your proximity to the infrastructure. I love that because it helps control costs. That's something every investor should be focused on right now. You just put out an updated resource estimate a couple of weeks ago. So let my audience in the room, Cliff, what should we focus on in Quebec right now?
Well, I think there's a couple of things to focus on. As you said, the infrastructure is in place, so that's an extreme competitive advantage. The area around Chibougamau is mining friendly. It's well-established camp, lots of historical mines, lots of projects. There's a real drive from the Quebec government and in the region to support ongoing mine development. So again, we're in the best spot within Quebec to see supported projects going forward. But just take, a couple of things to think about the project itself. In the iron ore space, you have to have the right project and the right logistics to be able to make your project work globally. In today's market, that means, are you going to have a mine that produces 65% or better iron ore? That we do. That'll have that. And why I say that, as we go forward, the ESG benefits of slightly higher grade iron ore product is trumping the lower shipping costs from Australia. So every day of the week as we go forward, if you have a 65% or better grade material, you'll be able to replace the lower grade 58 and 62%, which has been more prevalent in the past. And why is it so beneficial? Because you significantly reduce the off gases from the steelmaking process, so much friendlier to the environment and the air. So that's one of the things. The other thing the project will benefit on is we will have access to low-cost Quebec-based hydropower, significant competitive advantage to anyone who has to use oil and gas to fire their generators and things of that nature. So from a mining perspective, it will be as green as it can be. We have the greenest product within the iron ore space, and we will be using as much green electricity as possible to drive the mine itself. But as you said, we recently put out a new resource. So we have two zones, aptly named the North and South Zone within the project. We focused on upgrading the North Zone. We now have just under 560 million tons of indicated resource, grading 26% magnetite or contained Fe, which will upgrade nicely to produce that 65% grade concentrate using very standard off-the-shelf technology. So all it is crush, grind, and magnetic separation. There's no chemicals involved. It's actually very clean. In addition to that, we have the South resource that has a further 120 million tons in the indicated category and a further 600 million tons in the inferred category. So we have a global resource of now 1.3 billion tons, which makes us globally significant in size and scale. And that will be the backbone of the feasibility study that we're looking to deliver.
Now, educate my audience and myself, to be honest with you, on the exit strategy for iron companies. I often talk to gold and silver investors who are now investing in the copper sector, and they're looking for similar exit strategies. Obviously, those don't exist. Copper is very different than gold and silver. And so what can you tell us about the exit strategy for an iron ore company like yourself?
Well, I guess there's several different strategies you can look at. Typically with a project of this size and scale, and I think the numbers that'll be shown from the feasibility study, if we have a valuation, anything like we have now, we're not going to exist that much longer. Someone will come along and scoop us up. But with the team we have and the experience the team has across, as you indicated, we're able to pull off from 3 different companies, building and operating mines. We actually have the team and the capacity to build this all the way through to operation. And then we become a 40, 50-year mine life, generating somewhere north of 200 million a year in free cash flow. So this would be a cash machine once it's up and running. So we're of the view that we're going to build it and operate it long term.
All right. Now I want to touch on the team before we wrap it up here. But prior to that, you just got into the timeline there. And yes, that's the longer term time horizon. Absolutely. But what can you tell us about trigger points in the near term, right? My audience, myself, we're retail investors. We can hear the story. It can resonate with us. What everyone's going to want to know, though, is, okay, great, Cliff, what's going to make the share price go up? What are the near-term catalysts that people can look forward to?
Unfortunately, liquidity is a problem, so you got to bide your time, and it's trades by appointment some days. But I think the real trigger points is as we move forward over the next 9 months, completing that feasibility study, we'll have updates on how that process is going. But as I alluded to, we think that feasibility study will be significantly stronger than the older PEA back in 2020. And I think that's going to really highlight to the market the value of this project. And then really it's going to be a straightforward permitting process. Yes, you have to dot your I's, cross your T's in Quebec, but they are mining friendly and very mining supportive. So we just, that's a process as opposed to, we don't see that as a red flag risk of any kind.
Yeah, got it. Okay.
The biggest driver, to be honest, is going to be that feasibility study number, followed by, any issues after that. But today we don't see any.
Okay, and we can expect that Q1 of 2023. That's the next big trigger point that investors should focus on. Okay, awesome. Now let's jump into the team. I got to ask you about management ownership in the company. What can you share there?
Between the management and the board, we have directly about 25% of the company. So we're very much aligned with shareholders to get this project through with as minimal amount of dilution as required to bring this project to fruition. So we usually look at as much as possible non-dilutive financing. That being said, in addition to direct management and board, we have some very supportive shareholders we brought in over the past couple of years. I would say management and friends, if you want to call it that, is probably closer to 50%.
Excellent. Never let a CEO go. I'm talking to my audience right now without asking that question. It is the most important question you can ask any junior CEO, because I want to make sure that you make money when I make money, right? Yeah. At the end of the day. All right. And then, you do pool resources with Serato and your group of companies. So to wrap it up, Cliff, what can you share about that advantage? What's the advantage of working with a handful of companies like this and pooling the team?
Well, when you look at the team that we've assembled between Serato, Voyager, and Ascendant Resources, if we were individual companies, I don't think we could have as wide a breadth of skill sets that we have, or the experience that we have in both developing and operating mines, and be able to retain everyone. So we spread the load across the three companies and the workload across the three companies. And I think that's the key advantage here. You're always able to call on someone within that umbrella organization who's probably done it before. And again, it just makes sure that we don't have as many pitfalls potentially as a smaller, more slimmed down sort of single-minded junior could do if they just don't have that breadth of management skills.
Yeah. Okay. I appreciate that. Look, Cliff, it's been great chatting with you. Thanks for coming on and getting this in front of my audience. I'd love to follow up maybe in advance of that feasibility in Q1, if not around there, and get my audience the update. But thank you for today.
Yeah, great. Thank you very much for having me on.
All right, thank you for watching this interview. Now, 3 things before I let you go. Number 1, I publish a weekly newsletter and I love writing it. I share my biggest takeaways and action items from the conversations that I have on this channel. In addition, my thoughts on current events, economic events, political events, and you can subscribe for free. Just hit the pinned comment right beneath this video, or just go to jmartin.club and you can subscribe on the website. I'd love to have you join the team. Number 2, ad revenue from this channel is donated to an organization that is super close to my heart called Zero Ceiling. Now, Zero Ceiling's mission is to end youth homelessness, and the way they do this is by giving at-risk urban youth the opportunity to relocate to beautiful wilderness areas and then provide them with supportive housing, career training, and just generally positive influences on their life. I love what they do. Check them out if you're interested. And number 3, if you prefer to listen to my content as opposed to watch it, you can find me wherever you listen to your podcasts. Just search for The J. Martin Show. All right, thanks again.